Hello, everybody. I hope you're well and safe. And for those of you observing Ramadan, so it's Ramadan Kareem, I hope you're well in these times. This is a market update video. I'll be talking about two main topics: COVID-19 and how it affected the stock market, as well as what happened to the oil price last week. Some interesting news came out regarding oil. So, on to COVID-19. As you can see in front of you, there is a graph representing four major economies in the world, four major stocks. So the black is the S&P 500, which represents America. The FTSE 100 is the orange, which is the UK. The blue is the Euro stocks, which is Europe, and the red is the Nikkei, which is the Japanese stock. So four major stocks in four major economies. And 2019 as a whole was a fantastic year for the stock market. We saw record highs, especially at the start of 2020 actually. Sort of none more highlighted than the S&P 500, which was at its record high of all time. And market analysts generally thought this was going to be a fantastic year. And then COVID-19 decided to come along and sort of ruin the party, as it were. So as you can see from mid-February there, the average stock dropped by 35%, which is a very big drop. And then in the last few weeks, the markets have recovered by about 17% due to some market stability and other economic factors. So with regard to the drop, it's very important to remember that actually this is a healthcare related drop. It's not a financial crisis like in 2008 when we had a global financial recession. That was because of subprime mortgages and the financial sector. But this is a healthcare related scare, and we have seen similar things in the past. So if I divert your attention to the next tab here. So this graph here is a world index stock. As you can see on the left, there are a number of diseases that you won't want to have. It generally represents what healthcare causes to the market. So the first few months, the stock is likely to drop, and there's obviously some effects there. But within 6 months, the actual average return on a stock is actually 8%. So it rebounds fairly quickly. This is something we have seen in our stocks here. So there's been a rebound here of 17%, as I mentioned earlier, and this is down to a number of factors. One, because COVID-19 is something that isn't as new anymore. Scientists are researching it, finding potential drugs and vaccines, but also from an economic standpoint, governments have cut interest rates and also pumped cash into the markets, into the economies. So this is helping businesses and people, and also it gives confidence back in the markets, which is why we've seen on average a 17% increase in the markets. Do I think this trend is likely to continue? Yeah, I do think there could be some ups and downs in the next month or two, especially with unemployment, companies not making a lot of money at the moment. So I do think there's room to invest. The numbers certainly aren't where they were at the start of the year, so if you were looking to invest, now is still a good time to invest in the markets. So moving on to oil, something very interesting happened last week. Oil headlines, oil went into a negative, which was slightly misleading, and I'm going to show you why. So the price of oil has obviously dropped with COVID-19. It used to be around $60 a barrel, as you could see on this graph here. It is now currently at 14, depending on what index you're looking at. And we've seen a similar drop as COVID has affected the oil markets. But it hasn't gone into a negative, as you can see on this chart. It's not in a negative. So what happened was every stock has a futures index attached to it. So what a future is essentially an agreement between, in this case, an oil trader and the supplier, that the oil trader will buy a set amount of oil next month in the future, usually next month. So in this scenario, if I was the oil trader, I've promised my customers, I've promised that I'm going to buy 10,000 litres of oil next month for a set amount of price, set time, everything. Of course, oil traders have realised that the world's obviously on lockdown, less people are using oil, we're not using as much of it as we previously did. So then there's a bit of a problem. Because people aren't using oil, the demand for oil has dropped. So this oil is going to turn up, these 10,000 litres next month, and so no one's going to use it. Now, in most cases, you could just store the oil and use it at a later date. It's not a problem. But unfortunately, because oil price has been low for a few weeks and obviously demand has dropped, the oil storage capacity is full. They can't store any more oil. A lot of oil traders can't. So what that means is now they have to pay somebody to take the oil away, which is why the futures of oil went into a negative. They're paying people to get rid of the oil they can't afford to keep. Which is a really interesting scenario. So does that mean that oil itself, the price of oil, will drop further? It is likely. I think we're likely to see that. Would I invest in oil now? Obviously, it's so low now compared to its average of $60 in 2019 roughly. Would I invest now? Difficult. I think we should make investments for a long-term attitude, 10 plus years, 10 plus years. Will oil be able to rebound to $60 a barrel or near? Maybe in the short term, maybe worth the risk. However, for me personally, I wouldn't invest in oil. I think in the future, 10 plus years, we're not going to be using as much oil as we do. As we certainly did last year in the current time. I think oil with every year is becoming sort of less relevant as technology adapts, etc. So I hope you enjoyed my market update video. Please, any questions, please come back to me. If I can make anything better, then please do let me know. Otherwise, I hope you have a good week, and I look forward to seeing you all in the next video.